Good morning. Or is it a good morning? I don't know. We'll find out. Welcome to the morning show, Stock Market TV. Spencer, Steve, JC, Alfonso. We have a lot to discuss today, as you would expect, with the market as volatile as it is so far this morning and a little bit last week as well. So we got a lot going on. The dock is empty because, as far as I'm concerned, everything is on the table, right? Everything is on the table. Japan, crypto, Nvidia, everything, rates, it's all fair game today because market's doing things. We got to talk about it. So that's what we'll do. We'll have Kenny on, we'll have Tommy on, we'll have that's it. Tommy Lackey and Kenny Glick. That's the plan. So good morning, smash the like, and thank you. Yes, new haircut, bull market haircut. That's what I was going for. So let's go.
All right. Don't we love the smell of circuit breakers in the morning? Just get a whiff. Get a whiff. Isn't that nice? Everybody had a nice little weekend?
Not if you sold puts on Friday. You don't love it.
That's exactly right. That's why those iron condors come in handy, making sure that you're hedged, you see, right? All right, I want to talk about a couple of things before we get into the market. A few things that I think are worth noting. Let's take a deep breath here and let's think about a couple of things. First of all, for long-term investors, this is great. I consider myself a young man. I always talk about how the greatest thing that could happen is a good old-fashioned market crash. I got a long way to go. So for long-term portfolios, this is the best thing you can ask.
Wait. Stop.
You said the opposite thing last week, so stop.
I said that last week, and you said...
No, hold on. Let me tell you why. Number one...
Badgered.
Hold on. Let me finish. Kids' college funds, our retirement accounts, any long-term portfolios that you're adding as time goes on, this is great. If you're young, like if you're new to this business, right? You've never seen, the VIX at 50 maybe, you've never seen any of this, panic selling around the world. This is great. Pay attention. Take notes.
All of my friends are calling me.
15, 20 years from now, you could look back and you could read your notes. 10 years from now, I still have mine from the great financial crisis. Take notes, look around, be very observant. That's number one. Number two, for more tactical strategies and portfolios, nothing could be better, right? This is not the time to incorporate low volatility strategies. It's a good time to incorporate high volatility strategies. And then one more, when shit hits the fan, get smaller, right? So in other words, with the volatility index at 50, much smaller position sizing accomplishes the same goal quicker than the position sizing maybe from a month ago when the VIX was at 10, right? So the rule of thumb, and I'll let you guys chime in, the rule of thumb is divide the VIX by 16, and that is basically what the market is pricing in. So expect a 3% move at least on a daily basis for the foreseeable future with the VIX at 50. So in other words, to put things in simple math, if the Dow only moves 1,000 points, that's a very slow day in this market environment. Those are the things on my mind. How'd I do?
Well,
I think you should just apologize to Vicky and take the L and move on.
And what about me?
Answer two at this point.
Who's Vicky?
Yeah.
Who's Vicky?
Short memory.
No, from the chat on Friday. But I said the same thing last week.
We don't give advice. She was asking, the lady asking if whether she should be selling. First of all, I don't know selling what. I remember she was like, should we be selling? I don't know. Selling what?
I've been selling for 3 weeks now, taking profits in tech. We've been talking about it on all the weekly videos. Out of half of my Solana now, probably going to be out of the rest of it. I give a lot back at the end of bull markets.
Do you think that was it? Do you think that was the end of the bull market?
Steve.
Whoa.
Yeah.
You think that's the end of the bull market?
Yeah, probably.
Wow.
Obviously, we're going to bounce from here. There's going to be a fierce rebound rally. I plan to sell into it. I think most will. And I don't know where it goes from here, but I think the next couple of months, we got to just pare it back, be cool, wait, get through November, and then take it from there.
November? We're in August.
Yeah. I don't
November
like
have anything to do with this?
I don't like giving money back. These tops were actually tops, and that's it. You got to keep them tight here. Like you said, keep them tight, reduce your size, and that's it. That's what I'm doing. This is more cash than I've had since 2022. So
let's go. Why don't we go to the why don't we go to State of the Markets?
Yeah, all right.
People love Friday.
All right, ladies and gentlemen, the VIX is at 60. For those keeping track at home, excuse me, 65. The VIX is at 65, has almost tripled overnight. I don't remember the last time I've seen that. Not sure if I've ever seen that, actually. Back to 2008, I don't recall a time where the volatility index literally tripled overnight. You guys can check. Guys can check my math. Have you ever seen the VIX triple overnight?
No, not even during COVID.
But this is the kind of stuff that it's just not characteristic of a bull market anymore. And we've been seeing it and saying it for weeks.
Let's go over the data. But just quickly, have you ever seen the VIX triple overnight? Now that I mentioned it, I don't think I have. Right?
No, I don't think so. You want me to run the rate of change? What, 3-day rate of change? Right?
One day rate of change.
Oh,
1 day rate of change. All right. The Dow futures this morning are down 1,228 points. That's 3% on the Dow. NASDAQ 100 futures down 1,000 points. That's almost 6% this morning. S&P 500 futures down 4.3%. That's 235 points. Bond futures not up as much as you would think. Only up 1.3% on the 30-year bonds. You'd think it'd be higher. I mean, I would have bet my life it would be higher if you told me what all the other stuff is doing. Crude oil is only down 2% also at 72. Copper down almost 4%, back under 4. That's a big one. And they're even selling precious metals. Gold down 2.4%, back down towards 2,400, hanging in there pretty good. Nevertheless, silver down 6%, back under 27. And like I said, you got the VIX at 65, up 180%. And I'm not one for like quoting percentage moves in the VIX, but I think today that is certainly acceptable. And then finally, over in funny money land, you got BTC down 13% at 50,000. Ethereum down 16%, 2250. Solana down 17% at 114. Binance getting hammered down to 420, down 15%. Spencer Israel, total crypto market cap.
I don't want to know. I don't want to know. I don't want to know.
1.75 trillion.
I said I didn't want to know.
Dominance. Bitcoin dominance now at 57%, which is the highest in over 3 years. That Bitcoin market cap represents total crypto market cap. So that's what's happening this morning. Steve Strazza of the futures moves this AM. What stands out the most?
So I have some things. First, I have to send my buddies a link to our show. So this just one of the text messages.
Are you getting texts from normies? I haven't gotten one yet.
Oh my God.
You're getting normie texts? I haven't gotten a single one.
One of my best friends.
You see, it's early. 8:40 in the morning.
Fair.
Shout out.
They'll come tonight.
Can I go? Why am I being told to cash out my 401k today? Is this fake news or do we have a situation brewing? These are the kinds of texts that you want, but this is early. And JC, the price action is not normal. So anybody telling you on Twitter that this is ordinary bull market shit, this is ordinary corrective, it's not. And the VIX is a great example. We have never seen, and granted, it's 841. I understand that. We have never seen the VIX make a move like this, even close to a move like this in a single day. Go back forever. Financial crisis, not close.
You just look it up. We don't have anything like it. Triples, nothing.
Dude, the closest reading is like 100%. We're at 178, 178% right now. No, nothing like this on record. So this is the kind of stuff where maybe I'm wrong, right? Fine, maybe I'm wrong, but I can't go back and decide I should have sold my stocks once I find out I'm wrong. I could sell them now, and believe me, I could buy all that shit back when I'm ready and change my mind. I'm allowed to do that. So when things like this start happening, and this is the tape, And it's been nasty for 3 weeks now. It's been ugly. It's been different. The change of character happened 2-3 weeks ago with the way they were selling the leaders. You can cash out a little bit, protect yourself. And then in the case that you're wrong and you want to get back in and you want to add some exposure, you have that right. So there's no reason not to protect yourself in a moment like this for the market. It's crazy not to. There is no evidence that this selling is done yet. There was no evidence last week, right? You don't step in and try to be a hero. You lighten the hell up, you let the dust settle, and then you make a decision, right? But there's no reason to be fully levered or, have zero cash balance in a market like this. This is crazy. Japan just had its worst day since 1987. I'm not going to be whistling through the graveyard. I promise you that much.
Throw up slide 2, please, Spencer. This one's big. So this is 1989 was the high in the Japanese Nikkei. It took 35 years to get back to these levels. Paula Abdul was at the top of the pop charts at this point in 1989. The real estate of one park in Tokyo was worth more than all the real estate in the entire state of California combined. Michael Jordan had 0 championships at this point. Fun fact. Go back. This is what was happening in 1989. The Berlin Wall fell in 1989. Like, this is what we're talking about.
So
this is the first time that the Japanese stock market is back to those levels. And I've been told forever that the market doesn't have memory going back that long. JC, the market doesn't remember 15 years ago, 20 years ago. How about 35 years ago? Clearly it does. The Japanese stock market is down over 20% in less than a month since getting back to those levels, right? So Strazza's point, the selling that you've seen over the last few weeks hasn't just been in mega cap tech. You've seen it in you see it in Japan as well.
You're seeing it in emerging markets. You're seeing it in Germany and all over the Eurozone. Charts are breaking. Tops are now tops, not failed tops. We're going to look back at this one and say, wow, the most epic base breakout in the history of markets, maybe, at least at the index level, is now turning into the most epic failed breakout. I mean, this
for now anyway. Also, this is a good lesson because this will come again, I promise, where we'll be, or you will be without us. We'll at one point be saying, this is the first time that this stock or this index or this sector is back to those levels in 10 years or 20 years, or in this case, 35 years. And someone's going to tell you the market doesn't have that kind of memory. Show them this chart.
Dude.
Yeah, show them this chart. Because this is going to happen again, guys. I promise you. I promise you this is going to happen again.
I think also, the ratio charts are just prescient right now. Like, how good are the ratio charts with the NASDAQ versus the Russell, NASDAQ versus the Dow, tech relative, semis relative, just getting back to the .com levels. And now here we are. Hey, that QQQ relative trend, right, where it peaked and rolled over back in whatever it was, 2000, the entire stock market peaked and rolled over too. Everything. It was over when we were here. So we were looking at this chart for the past couple of months now, quarters even, saying we're back here. Does this just mean tech cools off and loses its leadership, but the bull market rages on? And that all the evidence was supporting that at the time. Now that chart is looking more and more like, no, the absolute trends are going to turn down just like they did last time this ratio was here.
I will say a couple of things. I am very, very much looking forward to see what the relative strength is in this tape. You're going to see a stock that's green that you're going to be like, how is that green today? You're going to see a sector that should be down more, not down as much as you thought. There's going to be some places that are down a lot more than you would have thought too, by the way.
Yeah, I'd say what it is so far.
That's what I'm looking for. So I'm looking forward to this. One more thing. And the other thing is what Strazza is talking about the ratios. Expect to hear the word dispersion a lot in the coming future. The dispersion between returns from sector to sector. You're going to have some sectors down. You're going to have the performance of individual sectors from a wide margin, right? One's going to be down a ton. One's going to be down very little or even positive, right? Yeah. You're going to expect to see a dispersion is the word of the day. That's the drinking word. Whenever they say dispersion, take a swig of that tequila, right?
I'm thinking back to Ari's study too. When everything is working, dude, look out, right? Like when it's as good as it gets, it means it's as good as it gets. And once real estate started working and some of these just absolute garbage sectors, I don't know.
We never got that as good as it gets. The worst performing sector was like staples, and it was up like 6 or 7%. So nowhere near that 15. So we didn't see that. But I will say this: speaking of Ari Wald studies, this is a good study from Ari Wald that studied market
That was a
corrections.
snowball effect situation too. It was going to get a lot better the next month.
Post breath deterioration versus market corrections from peaks in breath. And the market corrections from peaks in breath tend to be much more shallow than market corrections that come post breath deterioration that tend to be much more severe. So this one coming from a breath peak, not from a breath deterioration. Something to think about as well.
And also, let me address the Warren Buffett here, right? Because we come on a lot and we say it's insider selling. Don't pay attention to it. I believe last week. What are you rolling your eyes at? I believe last week.
I like what you're about to say. I think
last week we talked about the difference in Warren Buffett's insider selling versus somebody like this director on Tesla, right? This matters. Warren Buffett's out here selling, huge stakes, hundreds of millions of dollars in Bank of America. How much of Apple did he sell? This is a broad market call.
Wait. He sold roughly half,
dude,
over the course of an entire quarter.
Absolutely, right?
Right.
Important context. So this happened 3 months ago. At this point, three to a month and a half ago. If Warren Buffett doesn't want that exposure to Apple, this is Apple, guys. That's a broad market call. It's as much of a broad market call as anything else. That's why he's dumping Bank of America too.
That's why he bought it in the first place. Probably it was a broad market call, right?
Or is it just portfolio? Is it just risk management? It's his largest position by a country mile.
He just wants less
10% of his portfolio
exposure and more cash. That's what
of his portfolio.
So he's selling the large positions, he's raising cash, and that's not a nothing burger, right? When a guy like Warren Buffett starts to move,
he sold in Q. He sold in
actually
Q1 too.
Above average cash for him. He usually has a little under 20% cash. Now it's 30, and that could be old news already. By the way, to Strazza's point, we don't know yet.
He will be redeploying that capital. We will get Form 4s and Form 13Gs. We'll know it pretty soon when he's building big positions. He has too much money to avoid filings, which is what's nice about tracking Buffett. But hey, he's moving out, not into the market. I think that is information. I think what
he said when he was when discussing the Q1 sale of Apple, he said that was for tax reasons, right? And that was a smaller sale, but now it's 2 quarters in a row. So people have been wondering, Warren, what are you going to do with this Apple position? It's ballooned to take up like 40% of your stock portfolio. What are you going to do about it? He just answered that question, right? So he sold a lot, but I don't know if that's a market call so much it is like him just doing risk management, right?
Listen, Apple's expensive as shit. We talked about this last week too. It's hard to build a sound bullish thesis around Apple's valuation right now. Fundamental people can't be bullish Apple.
Apple valuation. Valuations are funny.
I'm just telling you.
Valuations are funny in every market, for the record. Let's go to some charts. I got 3 charts to show you. First of all,
and then we're bringing Kenny on.
S&P 500, kind of a big deal, right? Kind of a big deal. Throw up your Fibonacci retracements. Look at those former cycle highs from late 2021, early 2022. You're looking at about 4,800 on the S&P 500. We're now at 5,150. I'm not saying we get all the way down there, but that would be a perfectly logical place for support to come in. And I want to make a point about support because, in bull markets, you don't need technicians. And then once shit starts hitting the fan, every fundamental analyst is like, what's the next level? Right? All of a sudden they come out of the woodwork. So just because there's a potential level of support doesn't mean that the market gives a damn what JC thinks, right? But we can all agree, I think even Strazza will agree with me, that is a perfectly logical potential level of support. Would you agree with that?
Warren Buffett does not get extra time to file his position changes. That's a myth. I've heard it before. I'm aware of it, but it's not true. I'm sorry, Mark Watson. Yeah, man, targets have been hit. Now we got to look at retracements. I'm with you. This thing, we're not done. We're going.
All right, go next. So here's the NASDAQ. And again, these are not include morning action. These next 2 charts are really important because these are levels that we've been talking about all year. 400 on the NASDAQ 100. Big level. That was support earlier this year. That was resistance at the end of the prior cycle from late 21, early 22. That's at 400 on the NASDAQ 100. This morning, we are currently at We are on the NASDAQ 100, QQQ specifically. We're at 422, so we're actually nowhere near that. But that is a perfectly logical level of support. Again, just because it could be support, just because it's a potential level of interest doesn't mean the market agrees with that. But that is certainly a level I'm watching. And the one more, Strazza, this is very familiar to you. Just like 400 was a big level in the Qs, 200, Spencer, this is your Q, 200 on the Russell 2000.
And if
right?
you
on the IWM.
And if you add today's pre-market data in here, I mean, this thing is getting slammed back into the box, failed breakout.
We're at 200. We're at 200 right now.
Great. Yeah. And that's the level. That's been the level. The question that we have to be asking right now is the breadth and momentum thrusts that occurred. And I know we got the whaley stuff with the large caps, but really based on our work, the breadth and momentum thrust from a couple weeks ago, that was small cap stuff, not really large cap stuff. We didn't really get breadth thrust readings in our large cap indicators. We got them like crazy in small caps. So was that initiation, right? Breadth thrust, typically an initiation reading. It means it's the beginning of something. It's the beginning of a new uptrend, right? When you get a positive breadth thrust. Guess what else it could be? There's another concept where we get extreme readings to the upside. It's called exhaustion. So the question we have to be asking ourselves as analysts now was, were those readings from a couple weeks ago that looked like initiation for this group of stocks that we've been waiting for so long to start working? Was that exhaustion? Could it be? I think that's the right way to be thinking right now.
I think the Russell 2000 below 200 on a closing basis could get nasty. Could be a retest of those lows, really. So that 200 is a big one. 400 on the Qs, 200 on the Russell 2000. The S&P is kind of shaky. The Dow's kind of shaky. The cleanest levels, in my opinion, are the Russell 2000 and the Qs. Those are the cleanest levels. So, right?
Yes, 100%. Also, just two quick things before Kenny. This is not where Warren Buffett buys. If you want to know where Warren Buffett buys, you go look at the 2022 bottom. That's when Warren Buffett's buying. He doesn't buy when charts look like this. This is not when Warren Buffett buys. He buys when there's blood in the streets at the end of bear markets.
He buys when the government asks him to buy. That's
First of all, Warren Buffett sold all of his Moody's, and Moody's is up 14x since then. Warren Buffett sold all his Costco. Costco's up 20x since then. Warren Buffett sells a lot of things that go a lot higher after that. So let's relax with the Warren Buffett is God now. Like,
that's true.
I love Uncle Warren as much as anybody, but Warren Buffett has a very good track record of selling things that go up 10, 20 times after he sells it. So just keep that in mind.
The smartest thing in the chat so far today, Yosel says, cue the invisible hand. That is so true. And that's important to be aware of. The Federal Reserve has big guns right now. Really big.
Here we go.
Big guns, right?
What is it? The plunge protection team?
You're going to hear stuff.
Haven't heard that one in a while.
Oh, just wait about all the stuff you're going to hear about emergency rate cuts.
Plunge protection team.
You're going to hear about emergency rate cuts. The question is, how long does it take for Powell to act? Because an emergency cut could be coming sooner than we think, and the market is going to react very positively to that, and you're going to get a ripper. But if this takes a couple of months, it could be ugly until then. But the Fed has big guns right now. They had little guns just
before Kenny. One more chart before Kenny. Throw up the Bitcoin. I think we got to talk about it. It's a big deal. Never broke out. Ethereum. The relative weakness in Ethereum has been off the charts, and you're seeing it. Ethereum couldn't even go up on the ETF news. Remember that?
Yeah.
Powell's
new all-time highs for Solana ETH ratio, by the way, Strazza.
Yeah, ETH. Stat of the day from Louis.
Right?
People, these are tops. It's over.
Stat of the day from Louis. ETH went from up 80% year to date to flat year to date.
In a lot of these cases, go chart by chart, because I have. In a lot of these cases, there's a lot of stuff that's in a box now. Now, granted, it might be out of the box to the downside, but a lot of this stuff is in a box. Not so much Bitcoin, but a lot of stocks, a lot of sectors, a lot of indexes are back in a box. Back in a box.
Or they're breaking that box. I'm seeing a lot of boxes break today.
Yeah, in some cases, they're breaking the box, sure. In some cases, they're on top of the box.
Yes, we need Kenny. Yes.
All right.
We need Kenny.
Do it.
It's been a long time coming. They ain't come from my club, they tug it. Putting up numbers, 99 pounds, and I still kept it 100. Hola. Yeah.
Ooh, Kenny in the house. What up, son?
My God, what's up? I've been up 48 hours now.
How's it hanging, McFly?
I should have listened to myself on Friday. I mean, UVXY was doing things I hadn't seen in a decade.
Tell me more. Tell me more. Tell me why.
There was nobody hitting the bid on a product that usually goes down, especially on Fridays, and it was just getting bid up, and it was doing things that you don't normally see. And again, the market just was doing exactly what it should do when the UVXY is that strong. So, I mean, I didn't anticipate a crash this morning, but again, the Qs are right back to the 420 lows, and they actually hit 420. It's all rigged. It really is.
You don't think this is a simulation? I mean, the market keeps showing you. You think this is a market crash? Would you put this in the category of market crash?
Well, I mean, what are we going to be down? We're going to be down roughly 20% when all's said and done. The Qs are going to give back another 24, maybe give the whole thing back to 385. But, again, I wouldn't. The thing is, for us, we're just day traders. I was up, this morning. The market caught a bid. The VIX was collapsing, and there was a tradable move. We might get another one. But I'm, again, just like Friday, I'm not building portfolios. I'm not getting long here. I'm looking for what's right in front of me, and what's right in front of me is UVXY scaring the shit out of me right now. And we know it's going to revert, and it will go down inevitably. But when it's this strong, you have to just I can't short a market that starts down like this. Normally, I'm a big fan of the buying of this dip, and just but with UVXY at $68. Just sit back and wait. You got no problem sitting back and wait. And then when the market does turn and UVXY starts collapsing, I'm not talking about $2 pullbacks, 17-point collapse, the market will turn. You buy the Qs and the SPYs, and you'll be fine.
You are going to get, I'm telling you right now, mark my words, clip this, Spencer. You're going to get the biggest rallies you've ever seen in your life. Okay? The biggest rallies of all time come in these sorts of market environments. Just keep that in mind. Go to the Stock Traders Almanac and go to the last page. Shout out Jeff Hirsch. And Jeff Hirsch will show you the best days of all time in the Dow Jones Industrial Average or the NASDAQ or the S&P. You know when they were? They were in 2008. They were in 1987. They were in 2000. The greatest days ever come in the worst environments. By the way, the worst days ever also come in those environments. So it goes both ways. So from Kenny's perspective, there's tremendous opportunities. And just to address the chat, JC was buying everything on Friday. No. JC is looking for relative strength to buy that. I haven't seen so much of that yet. But yeah, I'm looking for relative strength. I got a ton of cash to put to work. And when the relative strength stands out, and by the way, it will, because it's easy for relative strength to stand out in this environment, that's what I'm going to be buying. So just hope that helps. Kenny, talk to me. Give me some individual names. What are you thinking here? Or is it just index stuff now at this point?
Oh, no, I'm glued to the UVXY because I'm not going to miss the collapse.
That's it.
Yeah, I'm not going to miss it. It inevitably will go down, but it's just like if you don't. I mean, I dip my toe in. I've lost 2 pinky toes already, seriously, and it hurts. So if you get it wrong, 7 points in your face in very, very quickly. So when it went under 58, I was excited, and next thing you know, I got smoked trying to short it. So I'm gonna sit back. When it falls, it'll fall, and it'll fall hard, and that'll be the QQQ trigger, and that's what I'm waiting for.
Kenny, can you tell me a little bit about position sizing? Do you change position sizing at this point? Because that's my rule of thumb. When shit hits the fan, you can trade smaller because you're going to get the same amount of moves with much smaller position size, right?
Absolutely agree. Yeah, I mean that's why. Luckily, I have a couple of toes left. I've been dipping in, So if I'd been going large, I'd be done by now. But yeah,
I can get you a toe. You need a toe?
Yeah, I need a toe with nail polish.
Green?
Yeah. So, I mean, that's why I'm not even looking at individual stocks. I mean, I see some stocks that I would be like, hey, look, NVIDIA under 100. I'll get around to that. It's all about the Qs. I mean, because anything I'm looking to buy is Q related. So I might as well just stick with the Qs. Plus, you got the daily options. The option prices are going to be out of control. You're not going to get cheap options today. And again, normally you don't bounce on the first day. Usually it's turnaround Tuesday. So again, I'm going to look, and again, that's what I'm focusing on. There's no doubt, because there's no way I'm going to be glued to the computer. There's no way I'm missing. The UVXY just went from $22 to 67. There's going to be money made on the short side, but it could go to 120 first. So be careful.
So nothing, no individual names. That's it.
No individual names today. No, just I'm sticking with the plan. Again, this no matter what you're looking at, I mean, it's going to be, a massive dip on it. So again, if you were looking to buy some $10 stock that, you missed out on, now that it's 6 again, maybe go take a look at it. But yeah, the 0-date options for the Qs are where I'm going to be focused. And, again, I'm hoping for the best. I hope there's a nice tradable rally. And then, I gotta get the hell out of Dodge. I hear there's a storm hitting the whole East Coast. I'm driving into it. So the market's crashing. I'm driving into a storm. My daughter's going away to college. It's going to be some week. So,
never a dull moment, Kenny.
Yeah, I know. I can't believe I gotta drive into that nightmare.
Isn't it a little early for college? Are they already moving in?
Yeah, they have a very, very early move in. So I'm driving down Thursday morning, and then we're moving in on Friday, and hopefully we're not flooded.
Don't they know that you can't be moving into college during market crashes? Like, what is this? What kind of amateur stuff? They don't have stock markets in Georgia, bro.
It's me. I am the Matrix. I just still haven't really figured out how to exploit me being Neo and Morpheus and the Oracle all rolled into one.
One more thing. So for a perma bear who is regularly trading from the long side in bull markets, how does this feel being a perma bear? You feeling good? Do you feel worse? Do you feel different? The same?
Well, I feel good that I threw it out there that this was coming. Again, UVXY getting over 30 was crazy. And again, when you looked at those charts, I call this the Jerry Orbach trade. We just gave it all back. Jerry Orbach. So we're right where I thought we would go to. I didn't think we'd get there in a day, but that's where we got. So yeah, I have an 18-year-old and a 21-year-old, my friend. Yeah, I look like a baby, right? It's all the
You're looking good, Kenny. All those push-ups and all that day trading, really keeps you looking young, Kenny.
Yeah, but I've been up for 36 hours straight, I think. So
all right, well, we appreciate it.
Hold on. Any words of wisdom for those who've never experienced anything like this? I mean, it's still pretty contained. I mean, oil's down less than 1%. I mean, the Nasdaq's getting hit pretty hard, but I mean, this is nothing crazy other than the volatility index. That's probably the wildest thing I've seen.
When Tom Hanks got COVID that night, that was crazy. Oil was at 0. We were seeing things that you'd never saw before.
So Tom Hanks got COVID the same day that oil traded below 0?
That night. And me and Jeff Hirsch we were at some seminar, and I'm like, holy, I gotta get out of here. I'm freaking out. He's like, you're going to go home and trade? You're kind of irrational right now, wouldn't you say? I'm like, I guess you're right. I'll sit here and drink with you.
Shout out. That's 2 Jeff Hirsch shout outs today.
2 Jeff Hirsch.
That's a great story.
Hey, say, listen, while I was sitting here, everything's been all right. The UVXY just came in 5, and the
Qs are move, Kenny. Don't go anywhere.
6. Why don't we just stay here?
Kenny, try not to breathe.
Don't anybody move.
All right.
Good luck.
Thanks a lot, Kenny, man.
Yeah.
Love you, bro.
All right, guys. Man. The link is in the chat. It was on the screen. Hitthebid.com. He's live trading there every day, even days like today. And days like today are actually the best days to be there. So check it out. That was good. Kenny's always good for a laugh, even on days like today when you might look at your portfolio and think it's hard to laugh. But I think
I got to tell you, these energy stocks are holding in there really well. Chevron's down 1%. Exxon's down 1%.
Yeah. If we're talking about relative strength, then I think we should probably bring on our next guest, because Tommy Lackey, this is his thing. This is what he does. He does relative strength scans every day, and he probably has a good window into what's going on out there. Even though it's early, like we said, it's going to change today throughout the day.
I'm kind of impressed. It doesn't seem that bad.
All right, well, let's see what Tommy has to say.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Tommy.
Mr. Lackey.
How are you doing today?
Listen.
I don't know, actually.
Have you ever seen the VIX triple overnight?
No.
Got it. So it's a no, because I don't remember that ever happening, but I haven't done the work.
Yeah, I haven't checked it to that level. I mean, to me, the VIX again it is obviously important when it gets to these levels, but it's more of a background thing. It's more of just kind of how it's fitting in what's going on. I can't really chart it much, a little bit, but you can't really do much technicals on it because it's just not really that kind of machine. But like you said, when you have a day when it goes up that high a percentage, there's just not a whole lot you do. And I hope Spencer didn't overstate things introducing me, because the reality is what you said earlier about relative strength is right. Doesn't matter what I looked at over the weekend. With another gap down like this today, you've got to reassess from where we are.
Yeah.
And we've got to basically start from scratch as data starts coming in today.
Yep. Couldn't agree more. Early candidates, very early candidates, to be fair. Energy.
No,
really standing out.
Food and beverage.
Well, the thing about energy, and again, it's something that to me has been holding up pretty well until these last couple of days, over the last few months, I guess, in a growth market. And maybe not quite months, maybe 3 or 4 weeks, but in a growth market, it had a pretty good run. It's holding up. And that's something to kind of pay attention to based on where we are in general with the rate situation and stuff like that. Again, all that's background noise, but you still have to know where it's at. I mean, I'm kind of with the RenMat guys and DeGraff and them, the fact that the Fed made a really big mistake by not lowering, but there's nothing we can do about that now. And I don't think the right thing to do is for an emergency cut. But, you start getting down 6.5%, 7% a day, that's going to push some people's hands, whether it should or not.
Tommy, how do you approach a day like today? From like a client standpoint, you get people calling
you.
You.
Words right out of my mouth, Spencer. Like, can you
get people calling you?
Yeah, can you remind the folks what you're doing for your day job? Through what lens you view the markets, because it's different for a lot of people. Just remind people of that, and then talk to us about how you're thinking through this.
Yeah, well, of course, I'm like everybody else. I wish I had gotten more out of the way, but luckily, there were some times over the last month or so that we reduced some technology, reduced some scenarios in there, and just kind of spread it out into a couple of other less volatile areas, even if it was upside volatility. It didn't feel good at first. It kept running right after I sold it, but semiconductors and things like that. And now it's proving to be obviously much more of a prescient. Now, I could have done that 3 times more and it would have been a much better day today, but that's not where we are. So kind of like Kenny said, there are some things you pay attention to yourself, but you have to look at the backdrop we're in. And until about a week ago, there were some small signs, sure. And I love the guys who trot out, "Ooh, I saw this and I showed you last week." But just like kind of how they're saying, and not to truly beat him up too much, but someone's talking today about should have listened to Hussman. Well, unfortunately, John Hussman's been making comments for almost 15 years about how bad things are going to be. So you just got to be real careful about how much you take any one opinion, mine especially. But the reality is that for clients, luckily, my relationship with my clients goes back a lot of years and a long time. And so I usually don't get that many calls. I'm going to get a few, and I have a few that are going to be nervous, and I'm going to probably write something and send it out to them anyway and just say, "Hey, here's where we are. Here's what we're thinking," because that just helps everybody. Helps them be more calm about it. Helps me get an idea to get them an understanding of, because I'll tell you, I'm more apt to buy here than sell, but I have to see something to buy. I was really loving the idea of a pullback in financials to add there, but right now you're in a different situation to where until, like JC said, we see what comes out with relative strength from here, there's no real reason to do that, even in the ETF world. But that's really where this next 5 days is going to be absolutely wonderful. One of the things I have on all of my relative strength scans you're talking about is an RS mover, which is basically how many relative strength points it moved over the last 5 days. Well, that'll be good to look at on the day that we put in a low, who didn't get beat up as much. And then that'll be good to look at for the next week to week and a half, saying, okay, who's jumping out ahead? Whether you recognize or think it's going to or not, those types of things give you a lot of opportunities for placing dollars for clients. And most, 90+% of my client money is ETF based. So I'm not out there day trading all the time, doing all this all the time. So I'm still trying to make shifts in sector ETFs and things like that, like getting out of semiconductors, just because we had a great run And we had a couple of those really big down candles that I just didn't like the look of. So things like that are more how I kind of try to, for lack of a better way to put it, putting guardrails over trying to do a lot of, daily and weekly trading. But here's a situation to where now we've got to pay attention. And I've told Spencer, you've known me for a long time, I've said this for decades, is what's most important now is to see what happens in the bounce. Whenever the trend is going in one direction, which this trend was obviously up, even if it had been weakening a little bit, whenever it's going in one direction, then all of a sudden it abruptly changes. Sure, you get a little information and a lot of panic, but where your real information comes out is when it tries to bounce or when it tries to go the opposite or get back to its original trend. If it can do that, it can get support. Now, don't expect all the support to come the first day. Low volume out of lows like this is not unusual because people got to stick their toe in before they're ready to dive in. So don't expect the volume to be super high on the first good up day. But as long as it builds over a few days, then maybe this thing has a chance. But right now you're in a situation to where there's enough destruction that there's going to be a mental battle with a lot of portfolio managers trying to figure out into the elections, into the end of the year.
All right, Tommy, two things you said there that really stand out to me. Number one, you talked about writing things down, sending out a note to your clients. If you have clients and you're doing that anyway, great. If you don't have clients, still write it down, right? Send it to your grandmother, send it to your wife, send it to anybody. It doesn't matter, because writing things down, key levels, key thoughts, key ideas, when shit is hitting the fan, and when shit hits the fan and our emotions are high, it's harder for us to think clearly. Sure. That's just science. So having those notes on paper, being like, oh shit, I said if this was going to happen, I was going to buy this. And it's a great reminder of the work that you were doing when your head was cooler, and you can refer to your notes. Write it down. Tommy and I, we write every day. We've been doing it for years, so it's just another day. And we could tell you just how important it is. Tommy, can I get an amen here?
I agree. Completely agree. I think it's a scenario to where whether you call it a journal or whether you just make notes or whether you just have areas that you're paying attention to, really the important part, and I've tried to explain this thing, not that I'm always going to get it right, but if there's one advantage I do believe I have in a lot of situations and a lot of advisors out there is that I am paying attention every day. I'm not reviewing the portfolio quarterly. I'm paying attention every day. Does that always make the best move? No. But over the long term, are you going to be in a better position as markets change? Sure. And that's one of the things that I think people with clients, or even where if you're trading your own money and you're already retired, have to realize is the markets don't care at all how old you are. So the idea of these rules of thumb of 60-40 this or 70-20 that or whatever are the most foolish things in the world. The market dictates when we get returns and when we don't. So our portfolios just need to be adjusted that way, and risk needs to take on a different approach than just a static rule of thumb type scenario.
The other thing that you said that stood out to me, I knew you would agree with that writing thing. The other thing you said is about, you're going to get the characters are going to come out talking about how smart they are. The same people that have been telling you for 15 years, like Tommy said before, that the crash is coming. The Harry Dents not to call anybody out, but they're all household names. Harry Dent's been telling you about this crash for 25 years. What's that guy? Jim Rickards has been telling you about this crash for a zillion years. The Husband guy's been telling you for the crash. Like all these people, you know who they are. You don't need me to tell, those are just some classics, of course. But there's a lot more of them out there, and they're going to be pounding their chests about how smart they are and how great they are. And I told you this was coming. Yeah, but you told me 10 years ago. You told me 5 years ago. You missed the entire bull market, right? So, and by the way, not just this cycle. That will happen in the next cycle too, and the one after that, and the one after that. Because once you get the end of a bear market or the end of any kind of correction, you're going to get a move that these same perma bears are going to say is just a dead cat bounce. This is not a bull market. This is a bear market. The crash is coming again any day now. They just got the crash. Then the crash is coming again any day now. And then 2-3 years later, I told you, right? And then the cycle repeats, right? I've been doing this for decades now.
And I don't like it on the other side either. but the
Right.
whole, I'm not trying to pick on these guys, but it does come down to this industry will do that to you because we're all human. We all want to be right. And the question is just how long do we hang on to it? And I think every one of us has hung on to it a little too long. We've had times in our careers, and I have times in my portfolios. I still have them from time to time when I hang on too long because I just felt like there was another story there. There was a longer term view of it. And then I turned around and said, yep, nope, that wasn't right. You have to keep moving and you have to look at what's in front of you today. It doesn't matter what was in front of us even 3 weeks ago, because I'll tell you, 2 or 3 weeks ago, I expected the correction to be pretty darn mild. And I really wasn't expecting anything this large or where we're at, even with some deterioration. Like you said, breadth had held up. There was a lot of the small cap stuff that was really did. I agree with Steve as far as initiation. Now we have to be open to the idea that it's not. But you also have to look back and see that typically when you get drops like this, it is either something that reverts itself pretty quick, or it's something that just becomes a crushing blow. And none of us know that right now. None of us do. But more often than not, it reverts. And it does at least have a good, strong bounce that allows you a little more freedom to get out. And it gives you the opportunity to assess whether there's anything left in the tank. And I think that's the part people have really given up on so quickly is something I love. The fact of just in these last 3 days, the fact that so many people are throwing the baby out in the bathwater. And even we're sitting here saying, you got to have that discussion. Whereas 2 weeks ago, we weren't thinking, you know what, we're about to go into a major bear market and this thing's just going to rip everybody apart. We've got to be more logical. We've got to let the dust settle a little bit here because you do get bounces, and those are typically when more of your decisions should be made.
Tommy, I got one more for you before you run. I know it's a busy day for you, I bet. So I appreciate your time. Thank you. Can you talk about the bounces that you're going to see? All the greatest days, all the greatest weeks in the history of the stock market come when volatility is like it is today, right? So the volatility works in both directions. Can you touch on how you're thinking about that a little bit?
Well, I think that is it. It works in both directions, and it does mean that you have 3 choices. You have to either sit it out, you have to speed up, or you have to size down so small that you can have much wider volatility type stops. That's the 3 choices. That's it. I mean, I haven't found any more in almost 30 years in this. So if there's another option, let me know. But right now, those are the 3 options. And so you have to figure out where you are with your risk level and what you can do as far as what you want to try to pull. I don't really want to split hairs here, but I came on to begin with saying, look, there's no way I can tell you what's going to happen from here. And anybody who is telling you or trying to say that, Now, if there are some people who are going ahead and buying this blood this morning because they're comfortable waiting till it bounces, I'm pretty comfortable as well that over some period of time, I don't know if it's my time frame, but some period of time, you're going to see Apple higher, Amazon higher, these things higher, that you can make a decent play. I have some friends who play these at situations like this. They love playing these with the now leveraged ETFs on a single stock, which is funny, but they work.
Yeah.
If you have that shorter term mindset and you have the chart ability, because right now charts are jokes. You got to start seeing, this is panic. So you got to start seeing some patterns forming, and patterns really only start forming when there becomes a battle between buyers and sellers. In the last couple of days, it's been all sellers. So we got to get those patterns forming to see, even with a short-term potential trade, you can't rule it out. You just got to know what you're trading. If you're a long-term person trying to buy down here, you better make sure you're long-term, because you could have another 20% down before we correct. I don't think that's where we're likely to be, but I'm open to it. And I think we have to be, and I don't want clients to panic now. If you're in it this morning, hitting the sell button at open is probably not my advice. You still don't want to keep stuff that's going to kill you, but at least assess what's happening as of today before you make one of those decisions. It's worth a couple extra percent just to make sure you know where we are today versus where we were Friday. A lot of times you get extremes like this. Extremes are like my favorite thing. I watched the Brett Thrust here. as far as just the breadth thrust indicator, which is pretty much a bound McClellan oscillator, is all it is. So you can look at it versus everything. I can look at all my subsectors next to each other with just the breadth thrust. And that's a great thing to look at, because when you start getting in that 30 to 35% range, you aren't going much lower. That rubber band is stretched. So that last, and the other thing I want to say before I go is, one thing people have to see is when we have real big extremes like this, if it proves to be an extreme, the reflexive activity will zero out whatever is the extreme part within just a few days once it really chooses to bounce. So reflexivity of that extreme going the last leg down and the first leg up, though the mirror image of those two often happens. So if you do truly believe you're in the last leg, it's not the time to panic.
Tommy, this has been amazing.
I appreciate your
Chat's
time
loving
today.
it. Obviously, I didn't plan this, but it really was a great day to have you on. So thank you for hanging out with us. Like JC said, I'm sure you guys like today requiring more focus. So thanks for coming on. Awesome. Seriously,
it's going to require focus after the start. That's the thing is, I want to look at everything and I wanted to know where everything was, but this is not the time to be freaking out. Give it a few minutes. We're already there. We've already dropped.
Tommy, I'll let you run. I know you're busy, so thank you for being here. But you're forgetting that a lot of investors haven't seen anything like this, like you have, and like how I have over the years.
I'm old.
I don't know.
Remember, keep that in mind. This is, we've seen this before, so we'll see it again.
Hopefully they'll listen. Hopefully they'll see and just pay attention to when they're at. Thank you guys so much for having me. I really do appreciate it. I'll come back anytime.
Thanks, Tommy.
Appreciate it, Tommy.
We keep saying that, like, if you haven't seen this before, what's the drawdown so far?
It's really not that big of a deal yet.
I know that's the point I'm trying to make, right?
This is really nothing. We saw crude oil trade below zero. It's down less than 1% right now.
Right.
Okay, a couple of things that I like to keep in mind for times like this, because like I said, we've seen this before. If you have a portfolio where you put money away every single month, whether that be for just a long-term strategy, whether it be for retirement, whether it be for kids' college funds. For me, I have a long-term portfolio that I do that. I do that for my kids' college funds, and I also do that for the retirement accounts, right? So I have 3 portfolios that I do that. Whenever the S&P is down 8% or more in a given month, you add twice as much, right? If you've ever seen a chart of compounded interest, you'll see that tail at the end, right? Because compound interest is, what is it? The world's greatest invention.
It's
what
the
was
eighth wonder.
That Warren Buffett said about compound interest, right? So if you add double the amount whenever the S&P 500 is down 8%, and maybe for you it's 10% or 6 or 12, whatever it is, but when it's down a lot, when you add twice as much in that given month, that tail at the end like just explodes even more. So if you want to add fuel to that compound interest, this is a very Phil Perlman thing to say. This is something that I've learned over the years because I've seen this compound interest chart. I know Ben Carlson and Batnick and these guys like throw those out a lot. For those accounts, that's what I do for sure. And I think that everybody underestimates just the power of that little tiny little adjustment. On a tactical basis, when
talk about our
you're
time
putting
frame.
on a trade and you're getting stopped out, first of all, expect to get stopped out. Second of all, don't be afraid to re-enter, right? That's something that I had to learn the hard way. I put on a trade in volatile markets, I get stopped out, it comes back and I don't re-enter. And it's like, motherfucker, I had that one. Don't be afraid to re-enter. How many times do you re-enter before Strazza, before you say, not just in this market, but any market? How many times do you re-enter before you say, the market gods are telling me something's up, I'm going to move on?
I don't stop, but I'm very different from other people in that.
3 or 4? 3 or 4?
I'll keep going. I'll be wrong on a trade 5 times. I'll keep going if I have conviction. Yeah.
I've asked this question a lot to a lot of people. I've heard 5 before. 3 to 4 is the answer I've probably heard the most of. But like Travis said, there's no right answer.
It also depends on the risk reward equation, right? Like I was doing something recently with risk reversals and Coinbase and Bitcoin miners trying to play like a ramp up in Bitcoin. And I knew once I got that trade right, I'm going 10x. So So I'm happy to lose 5 times to get there. You know.
Can you throw up the CBOE chart?
Also, I'm going to make you a list of things that we haven't seen before that are going on right now, just for fun. Because the whole "there's nothing to see here," folks.
Oh no, I
is-
didn't say that. Hold on, I did not say that.
I know.
I
but-
said I asked what the drawdown was at the moment, and then I said, as far as drawdowns go, we've all seen this before, right?
So
That's what I was. That's the point I was trying to make.
Fine. 3-day rate of change, basically back to pandemic crash levels and a lot of stuff. So, you know.
Yeah.
But as far as drawdowns, nothing too dramatic.
Well, yeah, because we're at all-time highs not long ago. So
No,
for
right,
sure,
right.
I totally agree. It shouldn't be the drawdown data that we're looking at right now, expecting to be blowing out. Right?
Can you throw up the CBOE chart, making new
Yeah, we
all-time
did.
highs?
This is it. It's up.
We'll talk about
Sorry, my screen's a little
drawdowns
slow. So apologize.
later. The selling is just starting here. I like what Tommy said. Like, don't go selling stuff today. I also don't think you go buying stuff on a day like today. I like kind of where your head is at, JC, of having some sort of a routine or process for buying stocks for the long run while there is blood in the streets. I don't think that means stepping in while the bloodbath is occurring, though, right? And so I think, like, the advice that I will, yeah.
Which, by the way, this gets back to a conversation that we've had a bunch of times, you and I. And granted, Steve Strazza and I are two very, very different people with different. I shouldn't say different people. We're very similar in a lot of ways, but our lives are different. I have 3 kids. You know, I have a lot more responsibilities. Strazza doesn't have any kids, doesn't have those, so like he could just focus on being tactical. You know, focus on what he's doing. I've got other stuff that I have to take care of for the family and stuff like that, right? So I think about a variety of different strategies at all times, right? Not just now, in the best times, in the worst times, in the middle times, like having different strategies. I think is.
I don't have any
for me, I don't
fewer
have
strategies
kids,
than
right?
you because I don't have kids, though. We both believe in buying stocks for the long run.
Oh yeah, you're already putting money aside for your kids' college
in
fund?
my savings account or in my IRA. Right? Like, I don't have a special plan, sure, but I'm saving.
And by the way, I'm not a financial advisor, but I'm pretty sure you can actually contribute to your kids' college fund before they're born.
Yeah,
There's like a loophole.
I have
Strazza's not
I have
doing
accounts with tax advantages, of course, like any you know, decent person who knows what they're doing. Sure, of course we're going to do that. I also just think, like, the advice that I was just giving my buddy about cashing out your 401k. I said, no, of course not. You don't do that, but maybe you lighten the contributions for a little bit, or even pause them for sure.
Oh, I
Not
like
right
doubling
now.
the
My
contributions.
point,
Lightening the contributions.
like you don't know where this thing goes, right? So,
Oh no, if we're down 8% in a month, I'm putting twice as
you
much.
remember me pounding the
Fact.
table in 2022, generational buying opportunity with all these growth stocks. I loaded up in my long-term account. I'm good. A lot of these things are 3, 4, 5x by now, right? But that's the kind of time where I'm adding to my long-term stocks. Not here. I'm trimming them here. Trimming them here for sure.
Is this market, and this may be an oversimplistic explanation, could it really just be as simple as the unwinding of the low vol trade and the yen carry trade at the same time?
There's nothing simple about the way things are being sold. They're shooting the leaders.
Hold on. Spencer's bringing up a good point, Strazza. Like, what is causing the volatility? The yen, interest rates, and
people are moving to
position.
the sidelines in droves. Big money is leaving the market. Liquidity is being pulled from.
How about this one, Strazza? How many times did we ask the question, both really and rhetorically, at what level of interest rates does the market now start saying, why are interest rates falling apart? Remember, we talked about that?
That was that I sold a ton of stuff. What was that, Thursday? When rates crashed and risk assets were supposed to have a party and they're all freaking tanking. Like, I don't need much. Like I said on the beginning of the show, I'm happy to come back in. I'm happy to be like, oh, I was wrong. I shouldn't have sold stuff. But in that moment when nothing's making sense, right, in the price action, I'm a big tape guy. I'm a big gut trader. I believe in being a gut trader. I watch the market. I believe that there's a character of the way that things trade. And when that character changes and I don't know what to make of it, I lighten up. It's as simple as that. It's the only rational thing to do.
You get smaller. And by the way, the whole gut thing, Annie Duke goes on and on and on and on about this because that gut instinct is something that you earn over time, right? That's something that comes through experience. Annie Duke, as far as I'm concerned, whatever she says is gospel. Love freaking Annie.
So a lot of
we
the
got to get her on the
systems
show.
people will tell you, and it's the way that they teach in textbooks that like being a gut trader is like the worst thing ever. I was raised at a hedge fund where I worked with the probably most renowned gut trader in the history of markets. And I know that's a thing. And he would get a feel for stuff and not like the action. And people say, why are we lightening up? I don't know. He didn't feel good about it. Okay. And I watched how well that worked for years. So maybe that's where I got it from, but I know it's a real thing and I could feel it. And in moments where you don't know what to make of something, that lighten up, you know, save it for another day. You could always redeploy, and we will, but things are funky out here, guys. That's the truth about this. You don't know where it goes. We have events looming like the election. We have the whole sell in May thing going on. We have the market probably bottoms in October stuff going on. And then we have these just insane breadth and momentum thrusts that now are failing, right? We always say like breadth is great. Seasonality is great. Sentiment, fantastic. Okay. Is price confirming it, right? No matter what it is, anything that's not price is price confirming it. When it doesn't in a way like this, what's up, right? What's really going on here? We'll probably find out in hindsight. Oh, that's the reason the market was selling. Right now, it's just selling. So ask those questions later. Protect yourself now. No reason to be a hero out here. I'm not jumping in buying shit today. I'm definitely not selling puts.
I would be very, very surprised. I would be very surprised if the day went by that I didn't buy at least 2 or 3 stocks.
I'm all about buying stocks for the long run. I was loud about this in 2022. You guys are making fun of me with generational buying opportunity shit. This is not the time. I'm not loading up long-term positions.
For the record, I agreed. We were buying in 2022. I just think it's funny when they say generational buying opportunity. I say it too. I say it too.
Was.
Hey, JC.
I'm definitely buying stocks today, tactically, particularly the ones that are showing relative strength. And I've already called out a few. Look at energy. Look at CBO.
There's a right and a wrong way to do this. I am so on board. Yeah.
Is there?
Yeah, and what you're saying is no good, right? So let's talk about the way to actually.
You think it's no good that I'm going to buy 2 or 3 stocks today? I mean, I might not, but
you're not buying candles that look like this. You got to buy some sort of green shoots. Right?
Like what? Candles that look
like what? You buy on
the
rebound. You don't buy when it's.
Buy what? CBO is making new all-time highs. What rebound?
So look, I'm going to trade the hell out of this bounce on the long side.
Hold on, but you're telling me you don't buy candles like this. Which candle are you
let the market settle, right? Like ask any trader. Like Brian Shannon would tell you, I need a rising 5-day EMA, right? Good traders don't just step in here with a short time frame. That's a good way to get absolutely railed.
I don't know what other traders are doing. I'm telling you that I would be surprised if I didn't buy 2 or 3 stocks today.
For the long-term account.
Okay, so on the topic of
what are you doing?
The IRA doesn't happen until another few weeks, so I don't know what I'm going to do yet. We might not be down 8%.
You can buy things whenever you want in an IRA. There's not like a set day that you get to buy. You can buy any day.
I'm not touching. For the record, I'm not touching my retirement accounts right now.
That's what I'm saying.
When it comes time to contribute, which is in another 3 weeks, then I will make the decision. Then I'm talking about
I can contribute to my portfolio.
I want.
Hey JC, so I have a scan showing every stock that's 500 million market cap or greater. There's 12 stocks today that are up 2% or more, and half of them are food stocks. Just saying. No, food specifically.
Yeah, staples.
Not staples.
Food specifically. Campbell Soup. Well, Kellanova has news, so that's why. But Tyson Foods, Campbell Soup, Treehouse, whatever the hell that is, General Mills, Mondelez.
Am I talking to a brick wall? So staples.
Oh my God. Yes, fine. Staples. But food, yes. They're all the staples, but yes. Fine.
Yeah, I'm gonna push back again on Strazza. Good traders don't buy stocks on a day like today. What the fuck is the matter with you?
Go ask any of them. Yes. That's right. Billy.
That's the dumbest thing I've ever heard. Good traders don't buy stocks on the day like today. That's the
It
dumbest
just depends
shit
on the
you said
time frame,
today.
right?
Dude, and come on.
It depends on your time frame. There's nothing wrong
On
with
a
buying
short-term
stocks today.
time frame. Billy, you're right. Listen
Yeah.
to Brian Shannon. Buy strength after the dip. 100%. There's a right and a wrong way to do this. There are people out there who are experts at this.
Why does it have to be one or the other? Why can't it be
Dude,
both?
go for it. You like you said, you sold puts Friday. That didn't work either. Like, go for it. If you want to step in it, you can get.
First of all, I did not sell naked puts on
Yeah,
Friday.
you were so excited. You called Sean and you came back on the show to tell us what puts you sold, right?
These are iron condors. You know the difference.
You sell
Don't
them?
now act
Did you
dumb.
sell puts?
You know the
Sell
difference.
puts. You protect yourself, but you sold puts.
I actually, I was going to. I haven't done anything yet, but I will today. I want to put on iron condors today, and I want to buy relative strength.
This is just
Same thing I said on
for our
Friday.
viewers. I'm like
To put on an iron
talk
condor.
this way
Why?
in this kind of environment?
Why? Tell me what the risk is of
Because a
putting
lot
an
of
iron
people
condor.
don't understand the risk with some of the stuff that we're talking about, and in this kind of a tape, man, you're just asking to blow up an account. Just go golf.
Okay, again, Strazza. What is the risk of putting
I
on
get
an
it.
iron
You're
condor
hedged.
today?
I don't know
Go ahead.
exactly what you sold, right? So you can only lose so much.
I
fully understand.
I just told you. I just told you. I haven't put on iron condor yet. Sean and I discussed it on Friday. We're still looking at it. I still want to buy relative strength. We're looking at relative strength. That hasn't changed. I don't understand. Like you're talking about, oh, people don't know. Okay, fine. What is people who don't know what an iron condor is? Why is that your problem? They could go look it up. They could go find out.
I just say to be cool.
But to say that putting on an iron condor today is irresponsible and bad for our viewers.
It's important to
that's fucking
understand.
stupid.
We're entertaining.
I think you're underestimating our
No.
viewers, by the way. I think most of our viewers can teach you and me a few things.
I
don't
just
know
care
if
in
you've
a
noticed.
different way.
Wait, who?
You care what?
This is the kind of environment where
Strazza doesn't want to put on an iron condor when the VIX triples. Excuse me.
Look, but bottom line,
do some things this week for sure. I'll be on here talking about them as I do them. I
said it 3 times. I'll say it again. I will be very surprised, and I guess we'll see. Maybe I don't put on a trade. Maybe I don't. But I will be very surprised if I don't buy at least 2 or 3 stocks today. I'd be very surprised.
JC has defined risk, right? So, and clear risk levels. That's the key here, right? He's
That's
probably
it.
he
That's all that
very well
matters.
could be wrong, but even if he's wrong, he'll be right.
And when you get to your desk in the morning, did you get out at your risk level? I don't know.
What?
Right. Whatever your risk level was, you come in, stock's down 10, 15%. I don't know if you're going to get your risk level. I'm just saying it's a volatile market.
Yeah, maybe
right?
you won't.
Having a risk level is great. You're not always going to get filled at it.
That's right.
Well, yeah, risk level can be more than one thing. It can be
You have a risk level.
Yeah.
it can be a price level.
While the market's closed.
Can we talk about how crude oil is
No,
basically
because there's
flat?
nothing to see there.
There's nothing to see there. All the relative strength and energy stocks and in crude oil today. Wouldn't any of you expect
No,
crude oil to
there's
be
war
down
in the
a lot
Middle
more?
East, bro. How much can it go down?
When is there
There's
not
war in the Middle East. Crude oil.
Are you really saying that? Let me ask you this, young Jedi. When was the last time there was not
When was
a
the
war in
last
the
time
Middle
you
East?
saw
Checking my
crude
notes.
oil
Hold on.
tank when there's a war in the Middle East?
When was the last time the Knicks won a championship? Right, I think we gotta go way back. Right. By the way, I know that was a low blow. The Dolphins have taken just as long, for the record. So
Listen, you got to protect yourself out there. This is not a market to be too aggressive in right now. Let the dust settle. There will be opportunities in the future.
I think there will be opportunities in the future. I think there
I
are
don't like the
opportunities right now.
risk-reward equation of entering new positions when the market's.
All right, then don't do it.
Real fast.
I will. Look at CBOE literally making new all-time highs as we speak. New all-time highs. People were talking about the markets crashing. Yeah, maybe some markets are crashing. This one ain't.
Vicky in the chat asked about circuit breakers. We're a long way off from that. We're halfway there in the S&P.
10%.
First circuit breaker is 7% in one day.
What's
we're
the
down
Nasdaq
3.5.
100? What's the Nasdaq 100? Because we were down 5%.
I thought
Circuit breakers are exchange breakers.
I kind of thought they were the same across the board. No, I guess they're not.
They're exchange breakers.
I'm talking about like
The text
circuit
just
breakers on these like
they keep coming.
I've gotten
Wow, I haven't gotten any.
I've gotten one.
Oh, this is my dad telling me not to panic. Actually, this one's a little.
Hey, I got that too. Yeah. The
3 levels of circuit breakers. You halt trading when S&P drops 7%,
Right.
13, and 20.
so that's what I said. We're halfway there,
So we're nowhere near it.
which is still a long ways off.
Yeah, we're
To,
nowhere
to
near
be clear, that's the point I'm making, is that we're not especially close.
it. You know that they started doing the circuit breakers because of what happened in 1987. Fun fact.
Okay. Just real fast. There are like a couple random ass headlines today, and the reason that Kellanova or ticker K is up like 20% is because they might get taken over. So then that could be actually the reason why a lot of the food stocks are up today. So yeah,
That's a good point. Food stocks, double whammy. They're consumer staples and the buyout.
So
right?
we'll need Mike Hurley on here soon.
Mike Hurley, I think I just emailed him.
Yeah, we
Wait.
need
Why don't we get Mr.
We're gonna need him
Strazza?
back.
Why don't we get Mr. Strazza on the show? Can we get Mr. Strazza on the show? Talked about
he's
dividend
great.
stocks.
I was
and
actually
panic
thinking
markets
about that the other day. He used to join us on Twitter Space. No,
on Spaces. He came out of
On
Space
Clubhouse.
once, Spencer, and he was just ripping Strazza. How Strazza used to play basketball and
just
never
like
passed
that.
the ball.
I was next.
All right.
That was good. That was
Yeah,
good.
we'll get
I
him
like
on.
that.
Get him on. He'd like that. But Mike really needs to come on. Most importantly, to discuss whether or not we're getting a fall day here. I think that'll be a great conversation to have over the next.
You're not going to get a fall day because the fall days are new 52-week lows. You're not
Yeah,
getting any new
we got to
52-week
talk about
lows.
it. You're gonna.
Yeah, not yet. Not
We
yet.
got to talk about it
Come on.
because I want to know about the shorter
I think
term new
today,
lows
tomorrow, this week, you probably get a fall day. So we're just.
Dude, we're nowhere near new 52-week
Dude,
lows.
it's just
What are you
movement
talking
in
about?
net new highs. So we could run it using short.
Are you sure it's not it's not a thrust
No,
in new
he's
lows?
using net new highs. Grant is.
Yeah, but net new highs includes
Yes,
new
it does.
lows.
That's very good. So Grant is.
So that means you need new 52-week
got the
lows,
chart. I
and
got
you're
the
not
chart.
getting
Wow,
any. How many new 52-week lows are you
I'm
seeing this
seeing.
morning?
Wait, check this out. I'm seeing 0 52-week highs and 0 52-week lows.
Right.
Exactly. Now that makes perfect
So look,
sense.
we'll talk.
Yes. Yes, Strazza, you're not going to get a fall day unless shit
So we
really
haven't
starts
had
hitting the
one
fan,
yet.
and it's
I
just
agree.
not.
I checked this weekend, and there's nothing.
And it's going to take it's going to take a while to get that. That's why I'm more interested in shorter term new lows.
We have
lists.
different ways to do this, where we could track the shorter term indicators to see how close we are. We're close, and that'll happen in a day. When the 52-week lows do come, it'll be bang, it'll be here. So we'll track the shorter term net new highs first and see what those look like. We're going to be talking about on our analyst meeting tomorrow. And I wouldn't be shocked if we do get a fall day here. That's all I'm saying. We had an abbreviated cycle last time around for COVID. We did not get a fall day at all. So that can happen as well, right? So we have to ask the questions. What happened during the pandemic crash that we didn't get a fall day? How could we have noticed something was up?
Can you just define a fall day, Steve?
That period. It's like a
Yeah,
shot
it's a
across
good
the
point.
bow where market internals change drastically in a very short period of time. Right. So net new highs will flip from positive to slightly negative. It won't be an extreme reading or anything like that. Just an abrupt shift in the market internals is what we're looking for. And that would foreshadow or forebode worse market internals to come in the future. That's when you get the fall day is where you change your mindset to I'm now selling rips, not buying dips. Right. And you track price to see that confirmation of the weakening or deteriorating internals. So I think that's the area that we're moving into. There could be some sweet, bounce here.
The way I learned it, and we'll let Mike Hurley, please get Mike Hurley in as soon as possible. I'd love to talk to him more about it. The way I learned it is when you get the most amount of new lows that you've seen in 18 months.
Can we have him on? And he can
That's
tell
the
you
first
because
fall day.
I know his system really well. Here's the Mike Hurley chart if you want to throw it up. But let's have him on and have this conversation with him rather than speculate about what his process is. I fully.
Yeah. When he's talking about fall, it's not autumn. It's literally the amount of stocks falling.
It's not like a solstice or what's the other one?
Yeah. It doesn't mean the leaves are turning.
Solstice. Yeah. Okay. I will try to get Mike on this week or the next.
Throw up the chart real quick, just so people can get a visual before
This
we
is
go
the
to
Hurley
recess.
chart. Okay.
Zoom in.
Yeah,
What's
leave
going on
Schwab
here,
alone. That's
Strazza?
right, Josh. Schwab's fine. Works fine. This is the Mike Hurley chart.
Good
So
for you.
IC weekly net new highs percentage is what he uses. We got the
I know. Walk through it.
Nothing
What
yet.
are we seeing?
this is nothing.
No, I know, but what are all these lines and
Price
colors?
chart up top, S&P 500. Nicey weekly, so over the trailing 5 days, right? Net new highs. Percentage of S&P 500 stocks making short-term new highs is in the bottom. That will kind of alert us that something's coming.
So what are we looking for here exactly? I just see like a lot of lines.
Take it off.
For me, who's seen this chart a million times, like it's confusing for me. For somebody who's seeing
so
it for the first time, Strazza, I'm telling you, they're wondering what the hell's going on here. Like, can you explain a little bit
the
further
middle
what the
pane,
hell's
those
happening
blue
here?
bars will spike lower. You could see it in late 2021. Look at how little that spike down was. That's a fall day. It's not much. It's not much. It's just a flip from more new highs to more new lows. It'll happen in a day or two. It probably happens out here today. I could tell you right now. You want me to check the Nicey? I know we got new lows.
Before we get into recess, let's just go over a few things in the market. Stocks well off their lows, like by a long shot. The Nasdaq was down 6%. Now it's down 3%. Dow is only down 2.5%, down only 1,000 points. So by the way, with the VIX, again, I want to reiterate what I said before. When the VIX, whatever the VIX is, divide by 16. Are we boring you, Strazza? Strazza's like yawning as I'm talking about the VIX. Is this?
No,
by the way, I love your shirt. It's a great shirt.
I'm in it. I'm having.
Take the VIX and divide by 16, and that's going to give you what the market is pricing in for the day. So, but at this point, we came into the day looking for a 3% move. That's what the market is pricing in. Look at the Dow down 2.6%. Look at the S&P literally down 3% right now. Right on point. Crude oil is flat. That's very surprising. To me, that's front and center. Copper's down 2%. Above 4, I would have expected more. More selling in gold and silver than I would have expected. Silver was down 6. Now it's only down 4. Gold was down 2.5. Now it's only down 1. Bonds were up twice as much. Now they're up half what they were up before. So you've already seen tremendous buying coming in right at the open. The VIX had tripled overnight. Now it's less than a double. The VIX is down to 43 from 65 like 2 seconds ago. So seeing a lot of movements already. I don't know what's going to happen, but what I can practically guarantee is that you're going to see massive moves. Because of the way that the options market is currently positioned, mathematically, there have to be massive moves, right? So expect big moves. 1,000-point Dow days is a slow day, right? So think about it like that. That's probably the best thing I could say.
Help people in the chat understand. Somebody made a comment of, oh, Strazza wanted to sell puts a few weeks ago. He doesn't want to sell puts now. Yeah, selling puts is not something you do in normal markets, right? It's not something we do normally. It's not about the premium, right?
Put spreads. If you want to sell put, buy it further out of the money.
Just in general, put selling strategies, premium selling strategies. I'm starting at the chart. I don't care what the premium is because I plan to collect all of it and keep it when I'm right. Okay. So for me, it's an environment where I have conviction that I will be right on a trade. I feel really good. This support level is going to hold. It's already been holding a little bit. I'm not just stepping in with 3 nasty red candles selling puts into the wind. That's crazy. So I couldn't.
And if you are going to sell
volatility
puts,
is, how expensive the puts are, how much premium I'm collecting. That's not what I'm selling puts for. I'm selling puts because of the chart. It has nothing to do with volatility. I don't care.
If you are selling puts because volatility is high and you're getting paid a lot of money, in an environment like this, buying further out of the money puts is a huge advantage because you could sleep at night because you're not naked.
Premium's going to be super expensive in this market right now. So,
well, it's half as expensive as it was 5 minutes ago.
That's
Can we go
true.
to recess? I got half.
Both those things are true. All right. Still, but JC, still expensive. Still expensive.
Still expensive relative to it's been half the prices that they were 5 minutes ago.
All right.
Yeah, half.
Wow.
Less than half, actually. Go ahead, Spencer. Let's just bring this back to what's important. And I just want to say how awesome it was to take the family to Central Park over the weekend. It was so good. I've got a girl that just turned 4, like literally 2 weeks ago, and I got twin 1-year-olds. The twin 1-year-olds have never been in New York City, and the 4-year-old had been to New York City once to see the Rockettes back in December. So it was their second time in New York City. We started at the Museum of Natural History. Holy shit. These kids were freaking out. Between T-Rex and Triceratops and all the dinosaurs, they were freaking out. And then all the animal exhibits on the bottom floors, like, you know, where they recreate the scenes in the Museum of Natural History. Fantastic. The kids loved it. Never seen them so well behaved in my life, especially at a freaking museum. Then we walk across the street, walk through Strawberry Fields. You got the stoner playing the Beatles, and, you know, smells a little funny in that part of the park. You know, it showed my mother-in-law the Dakota, you know, did the whole thing. Then we went to the boathouse, had a nice little lunch at the boathouse. They got turtles there in that lake. We fed the turtles. Kids love the turtles. Then we went to the Central Park Zoo. They've got the kids zoo, and then they got the regular zoo. They got sea lions, right? So good. They got the monkeys, right? My animal sounds are, I mean, I'm on point. I mean, we can keep going if you want more animals. It was fantastic, guys. Fantastic. He had a nice little dinner right outside Central Park. I didn't have to leave the park at all, basically, right? I didn't leave the park at all. Let's remember what is important here. Give your kids a hug. Give your family a hug. Tell them you love them. Just wanted to share that nice little day I had.
Awesome. That was great, and I love your animal sounds. They're second to none.
I get a lot of practice. Put them on the soundboard. You want to hear the snake?
All right, that was not as good. My only recess was slide 19. Is that from Sean? Thought this was funny. I don't know where this came from, but saw it from Sean. So
you see it every bear market. Come on, Sean, get new material. This is an old one, buddy. This is an old one, number one. And the CNN Fear Greed Index is criminal, just how terrible and useless it is. For anybody listening out there, take that CNN Fear Greed Index, throw it in the garbage, never look at it. It is misleading. It's malicious. It is not here to help you. It is here to purposely hurt you. This isn't a political thing. It could be the Fox Fear and Greed Index. It could be the what's the super right one? Breitbart. It could be the Breitbart Fear Index, right? It could be the MSNBC Fear Greed Index. It tells you how it's constructed, and it is telling you just how stupid the way it's constructed really is. This is not a sentiment indicator. Throw it away. And Sean, get new material, buddy.
All right.
Love you.
Wow. Blasted here. All right. Shout out Scotty Scheffler, Team USA.
Medal.
That was incredible. I thought Olympic golf was boring because we have the Ryder Cup. That's the real Olympics of golf. So nobody was really paying attention, but the coverage was actually good. And watching the final round was awesome. John Rahm blew up. Feel bad for him. Always feel bad when something like that happens. But
that's the guy that hits the ball really hard.
Just an incredible swing, abbreviated backswing. So not textbook. Similar to Scheffler.
Does he have an abbreviated backswing?
He's barely like
as bad as mine.
It's similar. You should look at his swing and try to figure out what you're doing differently from him.
How come my ball doesn't go that far?
Like one of those things where people don't understand why he's so good at golf because he's doing it all wrong, but there's really no right or wrong way to swing. Scotty Scheffler can't keep his right foot down when he swings his driver. It's incredible.
Strazza, we're already getting yelled at the country club.
Yeah, gotta.
I'm already getting in trouble.
It'll be all right. We'll be up there in August.
You know, there's a country club. There's another club that we're a member of where the lessons are like a fraction of the cost.
What do they charge for lessons at the club? I'm curious.
I think like $150, but the other one's 40.
Yeah, that sounds right. It's 100 over here, so that's pretty normal. It's worth it. It's good.
All right. I just want to say I rewatched the movie Twister over the weekend, and let me tell you, it holds up. It really holds up. It's from like almost 30 years ago, but still good, still fun.
But
great for the family. Or
isn't it awesome how good these streaming services are at recommending movies and shows to us that are
not rocket science, right? I mean,
it's been happening.
There's a new Twister. There's a new Twister in theaters, so they just assume that everybody would want to watch the old Twister, right? And they're right because I did.
The hurricane. I figured it was because of the hurricane. Here.
Maybe. Steve, also, I have a.
When I was in college, we had my best friends and I would have serious debates, like yelling at each other of who was hotter, Helen Hunt or Meg Ryan. And this is right around that post Twister time, like heated debates about who was hotter, Meg Ryan or Helen Hunt, like going at each other. This was 20 something years ago. So Twister reminds me of that. Helen Hunt,
great
pretty
actress.
good in that movie,
Are
right?
they both lesbians anyway?
No, what? No.
They were.
Steve,
I
I
don't
have
think
a,
so. Not that would have
I
mattered
have a
then
show
or
recommendation
now,
for you, but I haven't seen it yet because it didn't actually come out yet. But I think you'll like it.
You're going to recommend me a show that before you watched it?
Yes.
Okay.
And you'll understand why. It's called Bad Monkey. It's on Apple TV. It comes out in like a week or whatever, a week and a half. But it takes place and was filmed in the Florida Keys.
Oh,
and it's Vince Vaughn as like a restaurant inspector, or he's like an old cop, ex-cop turned a restaurant inspector who gets like drawn back into the world of crime, like a crime spree through the Florida Keys. And
so it's another. We call this the Bubba System films. A lot of Bubba System films. It's about the culture down here where you have to kind of be somebody to do something down here. They call it the Bubba System. Google it. It's very real. It's incredible. It's fantastic. But small town stuff. I would imagine small town Mississippi has the same problems. But Bloodline was also about that.
Okay. Well, I figured it. I heard it takes place in the Florida Keys, and I thought you might like that.
I'm in.
Last thing, I saw most of the Joe Rogan stand-up, the new one. I haven't finished it, but the first 2/3 to 3/4 of it, what I did catch was hilarious. He's in Texas, so he's sort of appealing to that crowd with the things he's saying and how he's saying it. I thought he did a good job of walking that line. I thought he did a masterful job, actually, at walking that line of making fun of both sides, knowing he's in Texas, saying things a certain way. I thought it was I thought it was pretty funny. So I look forward to finishing it.
Joe Rogan's great, man. He's excellent. I got to watch that.
I know, but we don't see him do stand-up as often because, I mean, he's an original comedian. He's OG, but you don't see his stand-up that often, right?
Yeah. All right.
He doesn't do it probably.
It's Monday.
Check it out.
It's Monday. We got the Flow Show, 11:30. Strazza and Sean. It's gonna be a good day for that because volatility and all that jazz.
The Flow Show. I have a funny feeling Sean's gonna want to put on some iron condors.
We might as well cancel the show. We're just gonna talk about the action. There won't be a trade.
I bet you Sean's gonna want to put on iron condors.
I talked to Sean a lot.
I bet you Dow's only down 850 points. It really is a nothing burger day. Nasdaq's down less than 3%. Oil's flat. For panic selling, sure doesn't seem like
Rocket does look great, and I care, Rachel. I care.
CBOE new all-time highs, by the way.
All right. Thanks, guys.
Good
day.
Of course.
Have a good one. See you tomorrow.
Bye.
I can't take no loss. I don't even know what it costs.